Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. Today I'd like to look at another example of my Holy Grail setup, this time on a 3-minute chart of the TF. This is the Russell Index. So it's a 3-minute chart of the Russell Index. If we look at the chart here, you can see that we did have a couple of standard buy setups in the direction of the coloured STF, but both of these would have been stopped out for minus 2R or minus 1R each, so minus 2R total. Yes, we all know and understand that losses can and do unfold. That's just part of trading, but the trick is keeping the losses small. But the setup I'd like to look at is this particular one here. The reason it's a history triangle is because these two bars have equal highs, therefore it's a double top. But if I put the analysis on here, you can see this was a TS4 sell setup. Even using the standard trade management guidelines, once we got to the first target, which is here, the STF was strong, therefore we'd swap to the ATR stop, which would have held us in right till about the close for a lovely plus 7.5R. So instantly you can see that this trade here at plus 7.5R more than made up for the minus 2R loss there. And that's the trick to trading, is having trades where the profits are large and the losses are kept small. However, that's not really why I wanted to look at this. The reason I want to look at this particular TS4 sell here, if I put the original analysis on, TS4 sell here, is why would you want to take this sell when it's against the blue STF? Standard traders would look at that and say, well, the trend is still up, therefore I don't like the idea of doing a sell setup in an uptrend. However, as an advanced trader, let's have a zoom in here and a little bit more of a detailed look at this particular setup based on pattern and some other items. First of all, let's look at the pattern going down into down into this low here. For this, if we go to advanced chart analysis, there's only 3 swings down here on the intermediate degree, so let's have a look at the minor swing. So if I do minor on Elliott wave, choose swing high or low, come down and click on the low bar, can we see that instantly we had a 1, 2, 3, 4, 5, just take those off to clear it up, so we had a 5-wave swing. In Elliott wave terms, 5 waves are impulsive and usually in the direction of the large degree trend. So from this we can surmise that the new trend is now down off this major high here. We also know that the best place for a correction off a wave 5 to end is the DP from the wave 4. So if we do DP and we click on the prior wave 4, can you see how the Russell Index rallied up to this DP level absolutely perfectly, and that's where the TS4 sell arrived. If I put the analysis on here, you can see that our A, B, C, which is a corrective swing, ended right in that decision point resistance area as well. Not only that, it was at the pink typical wave CWPT. So there's 2 things coinciding here. First of all, this pattern. First of all, there's an impulsive 5-wave decline followed by a corrective A, B, C up into a high. That signifies the main trend is now down, therefore you want to have a larger swing on the downside. So from pattern perspective, yes, this will be a good one to take. From resistance perspective, we have the ABC, typical wave CWPT. We also have the decision point high, so again that signifies that we are at a level where a high should unfold. If we look at stochastic, there isn't anything particular on the stochastic. Volume, there is a high volume spike on that bar there, so that gives us a little bit of indication on there as well. If we also, if I clear the chart off, if we also look at the major setups, Elliott waves, and choose swing high or low and click on this bar here, can you see that this is also at a wave 2 or B? Now that's the important part for a a Holy Grail trade, is that we assume that this is going to be a wave 1 down into here. We then assume this is a wave 2 correction. Then what we're looking for is a wave 3 type rally down. So if I do last on chart, you can see down here this is indeed what happened. This strong decline was a strong wave 3. And that's exactly what we're looking for in a Holy Grail setup. We're looking to get in at the wave 2 to then trade the wave 3. If I clear the chart off. So how could you have traded this? Well, if we go back to the setup, we put our analysis on and we say, okay, at the initial setup, which was back here, we can say, well, do we really want to come in out at the first target if it's a Holy Grail? No, we're assuming that we're going to go down to the typical wave 3 WPT. So how do we put that on? Well, we go up to wave price targets, we go to wave price targets down, which is this one, then we need 3 clicks. So if I click on this, the first click is the start of the sequence, which is this high. The third click is the low, which is here. The fourth click is the wave 2 high there. And then that gives us our typical wave 3 WPT. If I scroll out a bit, we should be able to see the label in there, the typical wave 3 WPT. So this becomes our target. So let's put the risk reward on at that level. Risk reward at that level is a very healthy plus 6R. So even at the first target, we can see that plus 6R is a very good profit, especially in relation to the small losses we had earlier. So if we zoom out and see what happened at the end of the day, you can see that indeed the market went down beautifully to reach that level. The STF was definitely strong at that level, therefore we could have ridden it right into the close. Down here, as we've already seen, a lovely plus 7.5R. And that was a great indication of how you can analyze and look for the Holy Grail setup, where the key points are: we had this as an important high, this was a major high, we had the initial decline of that high into that low is our wave 1, we then had the initial correction unfolding as an ABC, then the typical wave 3 swing down. But we also had some other points that helped out in that the pattern coming down here was a lovely impulsive 5-wave sequence. The rally up was then a lovely ABC, so we had 5 waves down, ABC up. We also had decision point resistance and typical wave C WPT resistance all coming in to signify that high, and also all coming in at a major wave 2 or B WPT as well. So all these things were coming in here to signify a wave 2 high, which therefore indicated a wave 3 swing to the downside. And as you can see, that's exactly what unfolded into the close of the day for a lovely plus 7.5R profit. In other words, you're risking $400 for a return of approximately $3,000. So a great trade, and yet another great example of my Holy Grail setup, this time on a 3-minute chart of the Russell Index. For those of you who use the NinjaTrader add-on, I just want to take a quick look at the same setup in the NinjaTrader add-ons. Again, Russell Index 3-minute chart. Here we can see our first 2 -1R standard trades that came out with -1R losses. Here's our history signal. If we right mouse click over the bar, do analysis, here's our TS4 sell, just as we had before. If I clear that off, hover over this prior pivot, right mouse click, do decision point, there's our decision point high coming in as well. Initial swing down, again hover over the low, right mouse click, Elliott wave minor, and that gives us our 1, 2, 3, 4, 5 Elliott wave intermediate, our ABC coming up in here, exactly the same as we had in 6.5. If we do down wave at the top here for our manual WPTs, remember we're looking for the typical wave 3 WPT, so we set wave 3 down. Tells us our first click is here, our second click is here, our third click is there, and here's our typical wave 3 WPT, just as we had in 6.5. We then do risk reward. We on the bar of entry coming down here, there's our initial 6R profit. Remember, STF was strong, so coming down to the close we do bang, 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 and there's our plus 7.5R profit, just as we had in MTPredictor 6.5. The only slight difference is here we had 5 contracts, here we had 4 contracts for the same 2% risk on $20,000 account. The only reason that is different is when you get right absolutely at the level of risk like this, sometimes you can get different programs doing different decimal place calculations, which means that for the NinjaTrader add-on, probably the 3rd, 4th or 5th decimal place just through this risk reward over the $400, and therefore we had to come back down to 4 lots rather than the 5 lots, but the same plus 7.5R profit came in. So that's the only difference, in that different programs, believe it or not, will actually calculate maths slightly differently, and it just means that just when you're right close to an absolute level for the risk reward, a small fluctuation in, say, the 3rd, 4th, 5th or 6th decimal place could just put the risk reward calculations the other way, and that's why sometimes the number of lots can be different. But that's the only reason. It's just a decimal place right down the line where there can just be a small variation in the way that the mathematics is calculated in NinjaTrader as opposed to a normal standalone program. But otherwise the setup is identical, and as we can see, there's our trade entry going down for plus 7.5R profit. Exactly the same with the NinjaTrader add-on, our trade entry going down for our plus 7.5R profit. So exactly the same in NinjaTrader as in MTP 6.5.